Hello everyone, welcome to Sam's Summaries. This episode is a deep dive discussion into Sam Fury's summary of the conclusion from the book, The Only Cryptocurrency Investing Book You Need by Freeman Publications. It has been created with the help of AI. The chapter is titled Amara's Law and Playing the Long Game. You can read the original post at samfury.com.
All right, welcome back everyone. I'm really excited for this one. You and I are going to dive deep into cryptocurrency investing.
Sounds good to me.
But not just any kind of strategy. We're not doing day trading. We're not doing swing trading.
No.
We're going long.
Long.
We're talking about the folks that are in it for the long haul.
Yeah, the hodlers.
And to guide us, we're going to be exploring the conclusion of the only cryptocurrency investing book you need.
Oh.
And the title of this section really got me.
Oh, yeah.
It's called Amara's Law and Playing the Long Game.
I love that.
What does that even mean? Well, you're about to find out.
Buckle up.
So to kick things off, I got to ask you, what is Amara's Law? I've heard of it, but,
Yeah, it's an interesting one. Basically says we tend to overestimate the effect of a technology in the short run
Okay.
and underestimate the effect in the long run.
So we get all hyped up about something new.
Right.
But then it takes a while for it to really make a difference.
Exactly. Think about the internet. Back in the 90s, everyone thought it would change the world overnight.
That's true.
E-commerce was going to take over. We'd all be working from home.
Yeah, the paperless office.
Exactly. It happened eventually, but it took much longer than anyone expected.
And it seems like crypto is going through a similar thing. All that early hype about replacing banks, becoming the new global currency.
Yeah. The book actually points out that crypto hasn't quite lived up to some of those early predictions, at least not yet.
Right, not yet. So what does that mean for someone who's looking at crypto as a long-term investment?
It means we need to be patient.
Okay.
We need to understand that real change takes time. We can't just expect to get rich quick. The reality of crypto, it's volatile. It goes up, it goes down, sometimes it goes way down. You have to be prepared for that.
I mean, how do you even deal with that kind of uncertainty?
It's all about mindset. You got to have a strong stomach. You can't panic sell every time the market dips. Think of it like a roller coaster. You know it's going to have ups and downs, but you're in it for the whole ride.
So is crypto just another investment then, like stocks or bonds?
It's definitely an investment vehicle, but it's also a technology, a whole new asset class, really. It's got its own risks and rewards.
Right.
Remember, it's still early days. We're still figuring out how it all works.
Okay, so you've convinced me. Maybe not quite yet, but maybe someday. So where do I start? The book mentions allocating 10% of your portfolio, diversifying across multiple coins.
Yeah, and only invest what you can afford to lose.
Okay, so break that down for me. Why 10%?
Well, it's about managing risk. You don't want to put all your eggs in one basket, especially with something as volatile as crypto.
That makes sense.
10% lets you get exposure to the potential upside without risking your whole portfolio.
Okay.
Then there's diversification.
All right, don't put all your money into one coin.
Exactly. Because what happens if that one coin tanks?
You lose everything.
Right. So you spread your risk, invest in different projects, different sectors.
I see.
That way, if one goes down, hopefully the others will balance it out.
Makes sense.
Yeah.
And what about that last point? Only invest what you can afford to lose.
That's probably the most important advice. Don't invest money you need for rent, bills, or anything essential.
Okay.
Crypto is still a high-risk investment.
Right.
You have to be okay with the possibility of losing everything you put in.
So how do you actually choose which coins to invest in? There are thousands out there.
That's where the research comes in. Look beyond the hype, the memes, all the noise. What problem is this coin trying to solve? Does it have a real-world use case?
Right.
Who's behind the project? What's the team like?
Okay.
Do your due diligence.
All right. So it's not just about picking the right coins.
Yeah.
It's about understanding the technology, the market, the risks,
Exactly. It's about having a long-term vision.
and a strong stomach.
Definitely a strong stomach. But remember, Amara's Law. We tend to underestimate the long-term effects of technology.
Right.
What if in 10, 20 years, crypto has changed the world in ways we can't even imagine right now? What if we're just scratching the surface of its potential?
That's a really interesting thought.
Yeah, it's something to think about as you embark on your crypto journey.
Well, on that note, I think we'll wrap things up here. Thanks for joining us for this deep dive into long-term crypto investing. And remember, always do your own research before making any investment decisions.
Absolutely.
See you next time.
See you later.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries, which you can download as PDFs, as well as other exclusive content. It's all completely free at samfury.com.